Welcome to the channel. In this video we will talk about interest rates. We will discuss what interest rates are and how they can impact your life. An interest rate is the amount of interest due per period, as a proportion of the amount lent, deposited, or borrowed called the principal sum. The total interest on an amount lent or borrowed depends on the principal sum, the interest rate, the compounding frequency, and the length of time over which it is lent, deposited, or borrowed. The annual interest rate is the rate over a period of 1 year. Other interest rates apply over different periods, such as a month or a day, but they are usually calculated over the year or annualized. Interest rate has been characterized as an index of the preference for $1 of present income over $1 of future income. The borrower wants or needs to have money sooner rather than later, and is willing to pay a fee, the interest rate for that privilege to utilize or have access to capital. A company or person borrows capital from a bank to buy assets for its business. In return, the bank charges the company interest. The lender might also require rights over the new assets as collateral. A bank will use the capital deposited by individuals to make loans to their other clients. In return, the bank should pay individuals who have deposited their capital interest. The amount of interest payment depends on the interest rate and the amount of capital they deposited. How interest rates can impact your life. Interest rates affect the decisions you make with money. Some of these are obvious. Think about how much more money you would stick in your savings account if it paid 15% interest instead of 0 points or percentage. How much less money would you put into stocks or if you could get 15% in a simple bank account? On the flip side, you might take out a new credit card at 3%, but you probably wouldn't borrow at 30% unless you absolutely needed to. Depending on which side of the coin you are on, it may be advantageous to have a higher or lower interest rate. There are less obvious impacts, too. For entrepreneurs and bankers, interest rates affect calculations about future profitability. For instance, it's easy to enter the capital markets and finance a new project when interest rates are at historic lows, but the same project might not be a money maker long term if expected interest payments double. This, in turn, affects which products and services are offered in the economy, which jobs become available, and how investments are structured. We hope you guys liked the video, and for more info like this, please subscribe to the channel and hit the bell icon for notifications. See you in the next video. Until next time.